This one might be really tough, but I'm gonna throw it at you, see what you can do with it. Because we hear about this all the time. People say, "Hey, how much should I pay myself? How much should I pay myself?" Is there an easy rule to go by, or some simple way for them to determine how much they should be paying themselves?
Yeah, so I guess there
Jackie's,
are
just to spoiler
various.
alert, she's going to say no, there's no easy way, and I'm going to say yes, there is, but go for it.
I did notice you were both grinning
Yeah.
whenever I asked that question, so I am curious to see what you have to say.
I think there are a couple different schools of thought on it. I think the easiest way of doing it is look at the amount of time you're spending in the business and how much you would pay someone to replace you, and then kind of figure out from there how much that is and if that's around what you're being paid. That's a great way to benchmark it, and you have something to show the IRS if that's why you're cutting your salary down. There are other schools of thought. There's other benchmarks around that benchmark where, how much is your highest paid person making, and does it make sense that you be making more or less than them? Things like how much of your income is coming into your household through a salary versus profit, and whether that ratio makes sense. Sometimes the IRS looks at stuff like that. So, but if you can, any way that, as a former auditor, not an IRS auditor, but a financial statement auditor, anything that you can tie to a source, is a good way to assess a reasonable wage.
Yeah,
That was
we've got spreadsheets where we take the hours that you're working in a specific role and what that role is worth. Here's the oversimplification that will not hold up with the IRS, but just as a gut check for those of us who don't like to do all the math, is what would you pay somebody else to do the job? That it like lawyers love the word reasonable, and we're looking for a reasonable salary, and that's really what it comes down to. But it is a lot more complex than that. We have clients that own a really successful, it's not a law firm, but professional services. There's three partners in the business, and their reasonable salaries range pretty significantly from mid five figures to mid six figures. So it's the three partners in the same business, all with equal shares, but doing different roles. So the salary ranges quite a bit there. But yeah, I would start with what would you pay somebody else to do this? And we do the same analysis. One strategy that we love is putting your kids on payroll. Actually, I need to rephrase that. Putting your kids to work in your business can be a great tax strategy, and it's the same thing. You have to pay them a reasonable wage. So what would you pay somebody else to do that?
Yeah.
That's something I hear about all the time, and it's something that you see the TikTokers do too. So will you talk more about that part of it, like putting your kids to work, and how all of that works and the benefits of that?
Yeah. So, I mean, everyone talks about putting your kids on payroll, and really they do need to work, right? So that means making sure that you have a job that they can reasonably do. There's a job description, and you're getting more out of just changing the way you get pay taxes there. You're getting some life skills into the kids. But beyond that, the reason that people tend to settle in at a certain number there, whether it's reasonable or not, is because if you get income to them under the standard deduction, then that means that no taxes will be paid on it on their tax return. So people tend to shoot for, it's around 15, I think it's 15,750 for this year as the number. And then also, if they have earned income of 7,000, they can contribute that to a Roth IRA tax free as well. So that is another advantage of putting the kids on payroll. But we do recommend that they can actually work, and that they have a job description that they can do, and they're tracking hours, and it's at a reasonable wage.
Usually when we talk about specific strategies, I'm the one saying it's simple, it's easy, there's so much opportunity, look at how much money that you save. And then Jackie's the one who chimes in and says, yeah, but there's like a whole bunch of rules and stuff. I'll flip it on this one. People get stupid and aggressive with this. Like, they think they have to be cute because they know what the standard deduction is, and I'm going to pay my 3-year-old $27,000 this year to be a model for my business. And in most cases, that's not going to hold up. So, like, even in our family, listen, I hate the IRS. I hate paying taxes. I like having the money more than I like giving it to them. We have 2 kids, and only one of them's on payroll. The other one doesn't work in the business because it would just be too much work for us. We find other opportunities to save on our taxes. So I think too many people just put all their kids on payroll at the maximum standard deduction without doing the math behind hey, they actually have to work. Like you need to employ them, and they need to provide value to your business, and you need to pay them again a reasonable wage. But yeah, on the flip side, huge tax saving strategy and huge potential wealth building strategy that if you're maximizing that Roth IRA contribution every single year until they're 18 years old or 22 or whenever you finally fire them, I mean, they're going to be millionaires by the time they grow up. Mm-hmm. So we like that one.
Yeah, that's a massive one. It's really good. I do think it's kind of funny. And you did say before we started that you are the rule breaker. Jacqueline does seem like the rule follower. When you were talking about the IRS, she even kind of looked down. It's like, I did notice there's a theme there that it's a nice yin and yang, though, I think.
For sure.
That's good. Yeah.